Hello, you're probably here because you're a small business owner that's thinking about taking out a business loan. Well, in this video, we're going to talk about what to expect when applying for a business loan and how you can best prepare. When applying for a business loan, you'll need to be able to provide a lender with basic information about your business. There are several documents which you'll need to produce. Don't worry, many of them you likely have on file. Let's walk through the documents you need and why each of them is requested by your lender. When considering providing you a loan to your business, the lender will always need to look back at the last several years of the business's tax returns. These critical documents give the lender an idea of both the revenues, the expenses, and the profit of a business year over year. Here's an example of what that cover page looks like. It shows the revenues, expenses, and net profit a lender generally looks for. Here's a sneak peek into the lender's perspective. The lender will use this information to create a business cash flow. The cash flow will include your existing business cash flow less the annual amount of the existing debt payments, any money you take out of the company, also called distributions, and the proposed amount of the loan you are applying for. Specifically, the lender is looking at your ability to repay the debt you are requesting. Generally, that means that there should be $1.15 of cash flow to pay for every dollar of debt. The reason the lender does this is to ensure that you're taking out a loan that you will be able to pay back. Another critical document that the lender will be requesting is an interim profit and loss statement. The interim statement will look at the business's profit and losses through the interim, in this case 2022, prior to the end of the year. Here's an example of such a document which captures the business's performances through the end of this period. Lenders also usually ask the business owner to detail the debt they currently have. They'll ask you to include the rate, the term, and the monthly payment of that debt, along with what the debt was used for. After requesting business information, your lender will also request key personal information for any business owner with 20% or more ownership in the business. The most important document will be a personal tax return for the most recent year. In this case, that is 2021. This document will be used to verify a business owner's personal income and ensure that they have some personal income to cover personal living expenses. Here is an example of a personal tax return. As part of your application, your lender will also request that you sign either a personal credit release or affirm that the lender has permission to pull your personal credit. Here is an example of what that document looks like. The lender will pull your personal credit, verify that all personal accounts are being paid in a timely fashion, and then use the credit report to complete a personal cash flow in which they input your monthly expenses onto a spreadsheet. The goal of this exercise is simple and straightforward: to ensure that personal income can cover personal expenses. From time to time, you might also be asked to complete additional eligibility questionnaires. These generally are yes or no questions to ensure that both you, personally, and the business do not have any defaults on government guaranteed debt or other such actions that would prohibit the lender from giving you a loan. Oftentimes, lending can be complicated. Let's make it simpler. A lender will always request business tax returns, a profit and loss statement, business debt schedule, a personal return, and personal credit release. If you focus on these 5 items and have them ready to go, you'll be sure to have a quick and seamless application process. Here's to the continued success of your business.